Hi, welcome to an Easy Trader Update. This is Kim speaking on Wednesday the 13th of March. Okay, looking at the euro dollar first, and this afternoon we've broken quite a key level on the euro. We had this rising channel that had been running through recently. Do the quick measure on that channel, that gives us the target on the break of that down to this sort of area of about 125.5 or somewhere in that region. So that's a sort of an overall on the break of that where we're going. But we've been sitting in support area, and it's been drifting for some days. If you just come down to a daily chart here, it's been drifting for a number of days around, chopping away. Now it's just consolidation pattern. It could have been argued as a spiraling sort of movement coming out of there, and they become quite unpredictable whether they go up or down. But it did look very weak. The more times it was hitting, actually just the purple line is just a bit lower actually where it was hitting. It's already broken this support here. Actually I'll leave it alone because I will move it down. There we go. So it broke that support level there. Its next key support level is down a bit around about 28.85, and there's 200 below it. But there's also I've just put the fibs on here from this key low from November through, and the 786 runs quite nicely with this this support area that I've marked on the chart here. But that's all very short-termism. That may just provide a bit of resistance, a bit of support rather. There is a bit of divergence going on at these levels between some of these sort of divergence. It's a bit mucky depending on what time frame you're looking at. There's a bit of divergence kicking in there. It could have easily worked its way through. As I say, it's quite messy. If you just come back to this weekly chart for a moment, and the next level of key support, actually I show it on a daily as well. But you can see from here. Yeah, where are we? From here we had the lows and the previous highs around this sort of area, so quite a good support area around about 127. Now earlier this afternoon we had a load of sell orders at 129.50. They were triggered and it's pushed it down at the moment. It could consolidate where we are in the short term, but it is looking weak, and yes, it's a bit oversold in the short term. We could get bounces. The view though for me is we will probably at the moment it looks like it's regression to the mean, if you like. It's mean, and it got quite away from the mean. The mean's down here, and it could tie up quite nicely either today, tomorrow. We may get a bit of a merge of this level here and find a bit of support. But as I say, long term I still see potential further downside here with some good support coming in at 127. Just very briefly, why is the euro just selling off so much? Well, effectively it's as much as there's no real resolution to the Italian situation. There's lacking of real growth signs, whereas in the US we've seen retail sales come out beat figures, we've seen jobs beat figures, and there's a sort of a bit more buoyancy at the moment. Yes, they've still got lots to do, and there's a fiscal cliff situation still sitting there. So there's no getting away from that. But in the short term, and the market's really looking at what's going on at the moment, and it's looking bearish. And there's, as I say, there's plenty of short-termism here. There's a little head and shoulders in the short term, which could see it coming down further. We've got this almost like it looking like a bigger head and shoulders running on here, which could see it coming down a lot further. But let's not speculate on that at the moment. Let's just look at what we've got here. We've got the broke of these lows. It's broken those, and the possibilities or support areas now sits quite a bit lower. Look, coming back to the monthly pivots, where we are in terms of monthly support pivots, well, again they're lower. Even the monthly S1 is quite a bit below where price is here, so it could easily run down to these sort of figures and beyond. If we start breaking out these lows here, easily run beyond. Okay, so obviously looking a tad bearish on euro at the moment. Cable for me doesn't fit too far different. We saw what this morning, it all looked quite rosy with yesterday's hammers chucked in there, and we saw quite a nice move up. All it ran up to is back into the mean regression here. and it's reacted off that at the moment. Let's just come out a little bit and look at this weekly chart. We are getting pretty close to one of the targets I was looking at in terms of support of around about that 148 area. We certainly put in 2013 lows, and we've taken all the 2012 lows out here, so we're really running back to 2010 sort of numbers, for which are weaker. Obviously the support areas nearer us are stronger. The further away, the less memory people have and the weaker they become. My ultimate target for the cable still sits from this pattern here somewhere around the sort of 1.4 area, potentially. So that's purely just on a bit of technical analysis there. Of course that could it doesn't mean to say it will get down there, but there's support area prior to that. As I say, at 148 we may see some sort of bounce at that level. As I say, at the moment, if we could get some foundation and build up, well, cable again hasn't seen its monthly pivot as we look forward. There's not really, I was going to say you could argue there's divergence, but you could probably argue there has been divergence, but that sort of works its way out. You look at this 4-hourly perspective and you can see the resistance we've hit. We haven't managed to find a close above the 4-hour 50, and I think once it does that, well, then we've got a chance of moving up to this upper band. It did look a bit more promising before. Now, as a common feature of if we were to get some sort of bottom in, it's not unusual for the sort of disbelief to come into the move. What I mean by this is you start getting a buy-in into the market. It gets to a level of some previous resistance levels, and there's a disbelief in the fact that it may go much further. Some selling comes in, some institutional selling comes in. It starts frightening people off, and it frightens them to the point where it's not quite made a new low. It may come back to a 618 or somewhere around in that region, find a bit of support and then take off. So that's something I'll be watching for with cable. Bigger picture, I'm still quite bearish on it. It really depends on what comes of this. If it breaks these lows here, I think certainly it will just we'll be looking for some further downside here. If it manages to put a higher low in and breaks this high here over the next few days, well then it could give us a case for a test of this upper regression channel, and maybe higher, maybe eventually towards the monthly pivot there. But at the moment it's certainly looking weak. Okay, finally, let's have a look at the future. Actually, let's have a look at the Dow Jones, because everyone's talking about the Dow Jones and its new highs, and we'll bring out to a weekly basis, and you can see it's made all new all-time highs. And for people keep on calling the sort of the tops to it, and I see it as a pointless situation personally. There's good reason why equities are seeing buying in to them in terms of hedge funds, institutions. They're looking for yield. They want to see some return. Bonds are not offering anything at the moment. Where do you start putting your money if you want to get some sort of returns? And equities, there seems to be the new thing. Are we going into a bubble? Potentially at some point, yes. Is it really worth fighting it? No. So it's a case of yes, whilst it may come back, test the previous highs or whatever, at the moment, yeah, we're getting a bit of reversal here, and this could see a bit more of a correction. We've had a lot of up days, 1, 2, 3, 4, 5, 6, 7, and then the doji just sort of saw us out there. I don't know if that was an up day in its own. No, it was a doji day. So yeah, it could have a reversal. Trying to say, well, I'm going to sell here and hold it all the way down for 1,000 points or so, I think it's just hopeful, wishful thinking at the moment. Looking at the dailies on this perspective, you can see we are pushing quite towards the extremes. We don't often go out of the R3s. We've gone across the R2, which is rarish, although it's happened recently. Last month was such a tight ranging month. It makes these a little bit less predictable in terms of there's potential to run out. Just as it squeezed up a tight range in this particular month, next month the pivots were tight together. Then we had a decent month there, pivots wide apart, didn't come into play much, and then we got again we got just a tightening here, and then off it's gone again. So sort of this stepped movement going on. It could just sort of run itself outsideward as well. Okay, there we are. That's where we are at the moment. As I say, I'm not trying to fight against these new highs or whatever else personally. I mean, I'm more of a forex trader than an equity trader these days, or even an index trader. I prefer to stick with those, but whilst everyone's looking at it in its flavour of the month, I thought I'd just quickly cover it. Okay, that's it for me. I hope you have a great week. Kevin will be back on Friday. Bye for now.